Welcome back, viewers. Sincere apologies for that blackout in transmission, just a few technical issues, but we are back and ready to go. Now, on the table, as I mentioned earlier, are issues to do with a statement issued by government that government is doing away with a multi-currency regime. Now, some comments coming in from our viewers who will have a look at them. Kudamugoa saying if they contain monetary supply growth, the currency thing will be a success. Somebody else also commenting that, does this mean the black market rate will come down? Now, we will have a look at some of these comments. You are also welcome to feed us with more comments. Now, I'll come back to you, Tinashe. We were discussing how that we have gotten ourselves to this particular predicament and how it is that we can navigate our way forward. Back to you, Tinashe.
Yeah, if you look at Eben, I was actually discussing with respect, saying there are some fundamental questions that we need to investigate. If you look at what really happened for us to dollarize, did we actually resolve those issues that had forced us to dollarize in 2008, 2009?
Of course.
If you look at what happened during that period, it's not the authorities that pushed for that policy of dollarization, but it's actually the market that actually forced us to ditch that local currency and started transacting in the US dollar. So if you're looking at what's happening in this market over the past 3, 4, 5 months, or most recently the past 2 weeks, the market de facto re-dollarized. Everyone was making pricing decisions in US dollars, and even most shops, they were now displaying prices in US dollars. So the trend in the market, they were now saying that the local currency is no longer favorable, and it's no longer supporting the macroeconomic environment. So the agents they were now moving towards using the US dollar. So to me, those are some of the fundamental questions that we need to investigate and really think that, okay, with this move, how far will it take us? Is it sustainable given that the government doesn't even have enough reserves to support a local currency? We all know that when you introduce a currency, in the first 3, 4, 5 months, it will be under attack. And the government should be prepared to defend it such that the market will remain confident using that currency. For a currency, you can't force it on the transacting public. A currency is something to do with confidence, and in this economy is the confidence which is actually the missing link. We have weaker institutions from the central bank and even supporting institutions. We have so many weak institutions, which I thought maybe as a starting position we should have implemented certain policies such that our institutions, they become more independent and much more stronger. Then we may think of having those currency reforms. To me, I really strongly believe that production is currency neutral. It's not currency that attracts capital, but it's your strength and the quality of your electricity that attracts investment. It's your strength and the quality of your infrastructure, your roads, your rail. And those things, that's what we need to see moving.
Okay, at this point, respect, is this the right move? Are the fundamentals in place yet? I know as soon as the finance minister came in last year, he said that one of the key things that he would seek to do is bring fiscal consolidation. Once that is done, then that would pave the way for the introduction of our very own currency. Now, of late, we've seen the minister boast about the surplus, and the word surplus has been his modus operandi. He's been talking about surplus time and time again. Is Zimbabwe ready for the introduction of this currency, as we're actually seeing playing out at this point?
I think the issue to do with fundamentals is quite key. The authorities say we have now achieved fiscal consolidation, which means to say fundamentals in their view have been corrected. But in as much as I have tracked the market, I don't believe those fundamentals which are in question or which must be put in place have now taken shape. Primarily, if you are to look at fiscal consolidation, it's a function of having to, of course, balance your books, but also achieving growth at the same time, while supporting the monetary side of the economy. And when you're looking at the fiscal side, yes, we have achieved a primary surplus in the first 4 months, but what has driven that surplus is primarily taxation that's coming out of intermediate tax, the tax which was the 2% tax which was introduced late in 2018, and also a lot of inflationary pressure coming to play as well. And so those are the key drivers that have resulted in that said growth. But the question really is about whether we are able to run on such a path up to the year end. And it's quite clear the July budget is coming just in a few weeks, and it will show a deficit position of about 2 billion. That is from government's own perspective. My perspective will be that the deficit might be in the range of 4 to 5. Why? Government is now trying to chase inflation. Why? Because costs are adjusting on a daily basis. We have seen infrastructure projects which are not completed in the first place. Some of them were shelved because the money that they budgeted for is no longer enough when you're looking at the issues to do with the loss in value of money. When you also look at Agric, we are about to face one of the worst years. In fact, in 40 years, we have never seen such a drought position. It's actually an equivalent of your 1992 levels, thereabout. And at that time, in 1992, we lost almost 10% of our GDP. So we are we are in a very precarious position as a nation. We are about to lose a lot of economic value. So it means fundamentals are weakening if we are looking on it on a more on a more expansive scale other than just looking at it on a 4 months basis. So what are we saying? On the fiscal side, I don't believe that we have now achieved what we can call a solid consolidation. If you look at the current account, yes, of course, imports have been coming off, but the exports growth has not been convincing for 2018. And for all the years from 2009 up to date, we have not achieved a trade surplus position. So all those things, it means a weakening BOP position. It means weakening forex inflows into the country on that respect. And yet our money supply is not constant. As we get into the second half, we are likely to see government borrowing more on the domestic front. And what is it that motivates them? The local debt, which was at 9 billion as of December, is now at 2.4 when you use the exchange rate. So they have got a big appetite for local debt. And that's what I think they'll try to play around with, in trying to play around the sterilization and the stimulation of the economy, because we are now already in a recession. What do I really mean by this? I believe that government has been forced into playing an action or playing a game where they've now realized that the market is rejecting part of their policies, both from austerity and some of the measures that they have put in place. So they've now been pushed to implement things that they were not ready to do. So they have to save face by saying, we have really achieved a solid foundation from a fundamental perspective. But these things will start to unravel as you get into the second half. In fact, when you look at the 38.5% in terms of subsidies,
subsidy,
yes, that will likely cost government something between 1 billion and 1.5 billion just on one crop alone, which is maize. And of course, maize is the biggest crop, but it's also one of the this is our staple diet. So I think we are in it for it's not going to be as good a position when you get at to the end of the year. And then you zoom in on structural issues as well. Of course, there have been tidbits of trying to reform the parastatals. It's only groundwork that has been done for those firms that are being earmarked for sale to private players. But in terms of some of the SOEs, they remain unreformed. There's high corruption levels and so forth. And all these things derail the aspect of government trying to achieve a pure and sustainable fiscal consolidation. So this is not the right time, but this is what's there right now. I think the issue is about how best do we try to contain. But I don't see us achieving this without having support, especially from outside in the form of a foreign currency package of sort.
Do we have the necessary confidence to back up this new currency?
My thinking, from where we started, there's a statement that I said, if you look at in this economy, confidence is the missing link in everything that we are trying to achieve. Sometimes, these policies, they've got, some well-intended, meaning or objectives, but because of lack of confidence and even, like I said before, weak institutions, they tend, to fail. So looking at this, now we have the policy. Now we have the Zim dollar as the sovereign currency. I think now it should be, respect our point of discussion, like now saying, okay, so what is it that the government should do to make sure that, that missing confidence is now there, then that currency, will take us out of this, economic, comatose, and, from this recession and that stagflation, kind of economic situation where we are in. Indeed, yes, we need, an economic, stimulus of some sort. When you are in a recession, you need, a reversal of those, demand depressing, policies like what have been being implemented by the government in the name of, fiscal consolidation. And then we need, more of proactive policies that will stimulate growth. One of it might be said, no, yes, we have to support, some industries, and to support them, we need a sovereign currency of some sort that we can control. Then we use monetary policy to stimulate growth. But my fear is, looking at where inflation is at 100%, it means that whenever you expand your money supply, it might turn out to be inflationary. So I think in terms of policy-wise, there is something, that we have, to do. And I think, we are actually in a dilemma, and authorities there, I don't know, they are more like,
I would bring back a statement issued by one of our viewers who said, if they contain money supply growth, the currency thing will be a success. What would be your response where that is concerned?
Money supply growth is one of those, many important factors that the government, has to manage. Yes, if they manage, to contain growth of money supply in that regard, I'm not saying it will work. In that regard, it might limit, the pace inflation will be rising. But there are other things. Our institutions, if you look at the central bank itself, we are not confident enough to say, let us, give them all that authority to manage or to print the local money, to print our own currency. We think that, if we give them, that green light, we might end up, going back to the 2007, 2008 era, where, new notes were being issued on a daily basis.
Fine. Now I'll switch over to you, Respect. Question being asked by one of our viewers, does this mean the black market rate will come down? I think this is one of the billion-dollar questions that we actually have. What's going to happen to the interbank market system? What's going to happen on the parallel market? Can you take us through that?
So on the black market rate, the opinions can differ, but my thinking is that once a person who's holding USD is compelled not to utilize that same currency in terms of transacting, it means they have to forgo it in a way via the banking channels. So effectively, it means more liquidity will now be available within the normal financial system. Whereas people were taking their monies home and they would transact at the shop, so it means there wasn't as much money kept within the financial system. So in a more crude sense, it might mean that there is more of USD supply that is let out to the normal financial system. And that would, by implication, eventually or gradually reduce the parallel market rate. Why? Because Forex availability may now improve within the financial system. But I think our economy is highly informalized. You find people who are 60% of the trade within the economy is conducted by individuals who may not necessarily, or who may choose to dodge the banking or the financial system, and that really leaves a huge gap. And when you also look at remittances, this is money coming directly from relatives either in South Africa or elsewhere, and much of the methods in which this money comes through sometimes is through sending via a third person, and it gets here as hard cash. So it means it might not necessarily improve what's within the normal banking system, but before you utilize it, you still have to dispose it. So I think we have quite a, I mean, on a more crude sense, it might reduce the black market rate, but it's a function of confidence as well. In as much as the technicals or the technicality side might be okay. If there's no confidence in the economy, then we might not see the kind of benefits that we are looking for.
Okay.
I think it's also evident on the interbank market, where the governor says a rate of this much may not be sustained from a fundamental perspective. But when you then look at where the rate is, it just shows you that there's something beyond just the technical side of things, which is confidence.
Okay, now, just in the same vein, how linked are the two? On the one hand, you have the currency stability. On the other hand, the fundamentals. Is there a linkage? Is that what we're saying? Are we saying if there is not stability on the fundamental side, that will bring about instability on a currency perspective? Can you shed more light where that is concerned?
Oh, okay. Maybe for the benefit of viewers, when we are saying of fundamentals, we are looking at things that supports a currency. Things that you use to defend your currency when your currency is under maybe speculative attack, when you have seen maybe your currency depreciating. These are your reserves that you use to defend your currency, implying that for you to have a currency, you need to have a good stock of reserves. When I'm saying reserves, I'm meaning of those things that you can turn easily into liquid assets. Your foreign currency, your gold, those forms part of your reserves. Then to add on to what Respect was saying, a currency, it's supported, its value, it's not derived from the interbank or from whatever, all those things that we hear about. A currency value is derived from production. If you are not producing as an economy, it means that you would need to import for you to continue consuming as a nation. So you look at how our structure is set up as an economy. We rely much, 90% of our activities, be it production, be it consumption, it's all imports. Implying that there is still that high propensity for us to import. Implying that tomorrow, even if we put a law to say that if you have got US dollars in the street, you invest maybe a 10-year job, it means because we rely much on imports, there is that the incentive for that lie for you to continue demanding that US dollar. So my thinking is, in terms of the direction of the black market rate, like now, when we are not knowing where we are going in terms of that policy
perspective, I think in the near future, 2 weeks, 3 weeks from now, we might see the black market rate depreciated at a much steeper rate than what we have been seeing the previous days. Because people, they will be dissecting and trying to make sense of the policy.
So maybe when we move forward, then we'll be seeing the direction that we are taking as an economy when that policy is concerned. Maybe that's when we will see maybe seeing the currency, the exchange rate maybe trying to stabilize maybe towards a certain rate.
Zimbabwe wants to know, is this new currency really our savior?
Currency is not our savior. Of course, there were structural issues to do with the high cost of the USD, the uncompetitiveness, the costs involved in its importation and whatnot, and the interests that banks had to pay in order for them to get that money and so forth. And also lack of latitude from a monetary policy perspective. But when you try to look at this new currency in terms of what it brings to us, yes, it gives us latitude in terms of monetary policy. You can be able to face challenges and try to have a right mix in terms of balance between fiscal and monetary policy. But as we have said, at the end of the day, you need, as every country needs, a currency which is stable, a rate which is not moving in one direction, either up or down. You need a currency which stabilizes within a certain rate, so that you can be able to meet certain macro targets. A currency which is strengthening at a very faster rate or at an unpredictable rate might mean a lack of competitiveness. So in case you are with USD and strengthening, it might not be desirable for the respective economy which is issuing that currency, in as much as it's also bad for the currency that is depreciating as well, because real value is being lost by economic agents. So at the end of the day, what's most important is to look at underlying factors. What solidifies, what stabilizes an exchange rate. And that which stabilizes an exchange rate, if it is in place, then it might come as a savior. Why? Because you may now have the latitude to play around with certain policy measures to either stimulate growth, but we don't have as much a good background to support our trust in the issuing authority or in the authorities that that now have got the control of the monetary policy. So that's the biggest missing link. But the government is confident that once they try to play in the market through sterilization, they might clear out a backlog, because we have got a serious backlog, about 1.2 billion in terms of payments that are due outside of Zim. And so as long as there's that hanging balance, and yet we are seeing trades of just about 2 billion on the interbank, it means the rate might actually continue to depreciate as well. So government plans to sterilize and push through that 1.2 billion backlog that's there. But how do they plan to do it? We just had a few weeks ago that we secured about 500 million lines of credit. And maybe they've been doing some small drawdowns, but largely even that money is not enough. That's why I said, in as much as we might try to adopt this policy measure, you need an external leg as well. And this external leg is a foreign line of credit. Why? Because on the local side, if you play with money supply, then if you might actually be pushing inflation, whereas you're trying to stimulate growth. So there has to be a right mix. The economies which utilize these policy measures, it's because they also have got a bit of a leeway in terms of getting cash flows from outside their own jurisdictions. So this is where the challenge is. Our economic fundamentals are not yet in shape, and therefore we have to rely or anchor on a third part. And this is how precarious the situation is. So the success and failure would depend on the country's ability to obviously seek an external line, as well as trying to see or put the right mix to these policies that they are introducing, so as to retain confidence from the market.
Now, there are key issues that Zimbabwe is currently grappling with. Electricity.
Saka hazvigoni kuti nyika ibudirire kuenda mberi ine mari yedzimwe nyika isina mari yayo. Mari yedzimwe nyika inogadzirwa nenyika.
Previously, government had demanded that payment be made in foreign currency. What's going to happen? Can you start maybe by taking on the issue to do with fuel and electricity, then respect, you would then take on the issue to do with the ZIMRA issues. Over to you, Tinashe.
Okay. If you look at the issues that to do with your fuels and other things that we import, like now it means that everything is now being sold in Zim dollars. There is no need for you to go at a service station and you fork out your US dollars for exchange of your fuel. So that's where the much risk is. So it means that when those players there in those sectors, when now they demand for forex payments to import that fuel, if the government doesn't provide that foreign currency in time, it means that it will be an additional cost to business. But there is something that I wanted to add during this discussion. Like what I was saying before is production to me is currency, it's currency neutral. I would want to do maybe an exercise to see what proportion of competitiveness is explained by currency. Now, if you do maybe your research in Zimbabwe, you might see maybe the proportion of competitiveness that is explained by currency. You might be shocked to see that it's insignificant. What drives competitiveness other than currency is your issues to do with your infrastructure, your electricity, your fuel that you have mentioned. So if you don't have reliable fuel, if you don't have reliable electricity, it means that even if you implement even the strongest currency, the US dollar, you end up, having these issues that we are facing today. What we have is not a currency problem. The current problem, the crisis that we have, was just a manifestation of these deeper, structural issues that we have as an economy. So to me, what we have to do is not, to spend so much time, trying to concentrate on the current issues. To me, I would say fix the economy and all those structural issues. Then the monetary problems will solve themselves.
I realize. Now, over to you, Respect. Zimra.
So with Zimra, obviously taxes are now going to be paid. They're now going to be paid through the local currency. If you look at some of the exempted items that will still be paid in US dollars, these include some items which are categorized as luxuries, including vehicles. So importation of those goods that were specified as of last year to be luxury stuff will be paid for in USD. So this is exactly what it means from a Zimra perspective.
I realize. Now, final thoughts from you, Tinashe, then lastly, Respect.
I think we are in it, for a long journey. The outlook, I'm not seeing it as much positive. I think there is so much uncertainty out of them, and I feel that businesses might be slow in the short to medium space, whilst we still, to dissect and see the path and even the meaning of this policy initiative. It came as a shock. We expecting it, considering that the president and even the finance minister said it before, but we didn't think that they would implement it in this shortest space. But my thinking, if they manage to monitor or to contain money supply, then they also support that currency introduction with proper long-term economic policy which speaks to the country's vision, and that policy should not be just a policy, but a policy with clear benchmarks, such that all those fiscal policies or budgets that will be implemented by the finance minister would have, a certain, yardstick or benchmark that would appraise it using that. So that's basically my thinking. But I think having a currency maybe is the starting point for us, to try maybe to move towards the rand way, because authorities, they were saying that for us to be admitted in the rand monetary union, one of those conditions that we have to meet or to satisfy is having our own currency.
Lastly, Respect.
I agree with Tinashe. We are in it for the long haul. Challenges that we are facing, to me, are basically stemming from a structural side, which I've mentioned just a short while ago. So I believe that before we solve these structural challenges, it's very difficult for us to have a currency which can which can stabilize in a sense. So I think the authorities now would have to look closely, especially on the monetary side, because it's a very precarious arm of the economy, of the economy. So we have to manage our money supply levels now that we are in full control of our monetary policy. It will be very key to see how they restructure even their securities in terms of treasury bills, because the market will be closely watching at those aggregates, because once they go out of hand, it also causes a very serious shock, especially in terms of the exchange rate. And it's now also important to see how to best drive the external side of the economy in terms of pushing exports and also rebooting the productive base of the economy. There has to be ways, there have to be measures. You can't just go into this measure of introducing a currency without looking at those aspects. So I believe that government is possibly working on those, and maybe in the very short term we'll hear moves that are being pursued to try to look at the current account as well as on the money supply side, to see how they will be able to stabilize it and maybe shift the terms of their securities, as well as look at the structural issues to do with the economy. This is one of the key challenges that we have. A lot of our institutions are not in good shape. Lack of proper management from ZESA to all those institutions, you name them. So there's need of a deep structural reformation that needs to be in place in order for us to get back on our feet again. And like Tinashe said, the monetary side will soon correct. It will correct, in fact, if you put all these things in place. But it's a matter of how long you need to go before that, before those things are changed. So I think we are in it for the long run.
Well, thank you, gentlemen, for the perspectives. We have to go now. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. From the Equity Access team and I, Danke and adios.